Okay, I just want to make sure everybody knows where they are. This is not the Ludacris show or whatever, okay, concert. That's later, but, you know, sign autographs. Seriously, my name's Mike Fitzgerald. Welcome, everyone. We are going to talk about commercial underwriting, and before we get started with the house lights up, just to give the panelists an idea so they can adjust their comments appropriately. Show of hands. How many folks are actually on the business side of either commercial underwriting or commercial claims, if you raise your hand? Okay, so gotta stay true to like pricing and underwriting. Okay, we're not gonna fool these folks. How about systems? IT delivering solutions? Okay, and finally, and this might be a little overlap, any startup folks involved in delivering to that space? Great, thanks. So we got some core insurance folks in here. We got some folks delivering solutions. So really happy to be here, and thank you so much. I guess you can really tell an insurance geek when they get excited about talking about underwriting, whether it's commercial or whether it's personal, whether it's specialty, global. And I'm really glad because I get to ask the questions of these gentlemen, Jason McDermott, who is the CEO of Chisel. We've got Greg Puleo, who is with QBE, which is a global commercial underwriter. Cameron is with McKinsey. And Yinnon is with SOMPO Digital Labs, and he heads that up. So the last thing I'll say in introduction is we're going to talk about commercial lines, but we're going to talk about it from two perspectives. One, you know, it's not a monolith, and that is there's small commercial, and that has certain characteristics and certain needs. And then there's mid-large commercial. We're going to group those together for simplicity. And those are everything from your 7-location dry cleaner all the way up to your loss-sensitive global accounts. So we're going to do that. So that's the first point. The second point is we're going to talk about business first and what commercial business looks like. We're going to talk about insurance second. And third, we will talk about technology and how that responds. Okay, so business, insurance, and technology. So, Jason, you got the seat next to me, so you get to lead off. The first question for each panelist to give their input on is, in the last 2 years, but even further back than that, last 5, how has the business environment changed? What are the challenges that we have to be aware of? And then we'll talk about how insurance responds to that.
Yeah, thanks, Mike. I'm Jason McDermott, by the way, Chief Executive Officer of Chisel. We are an AI ML platform that help carrier, broker, MGAs automate the placement process. You know, if I think back before the pandemic, which is why you probably demarked it at the 2-year point, you know, there's a lot of manual process, high volume, paper-based processes that need to be solved. And, you know, carriers were struggling then with, how do I get to the right submission? My inbox is being buried with submissions. How do I focus on what's the right risk to quote, what's within my appetite, and the ones that are in my appetite, how do I find the best one where I have the best chance to win? 2 years ago when the pandemic hit, if you think about it from a supply chain perspective, the problem exacerbated itself. Risk appetites changed, pricing changed, and brokers in the distribution market didn't know who to send risks to. How do I get it there? What is the appetite? And so consequently what happened when we talk to carriers is they're now buried with 3 or 4 times the amount of submissions they previously had to struggle with. And so that problem didn't go away, it just got worse. And so they're really suffering now to solve for that problem and gather the data throughout that process.
So insurance is mysterious to most folks who don't work in it. If you actually talk to a layperson, if you talk to a business person, then Jason, what I'm hearing is part of their business is actually more complicated now because either the broker's coming back and they don't know who, or it's harder for them to know where to go. Is that right?
Yeah, it's harder to know where to go. So how do carriers communicate their current appetites and know who to market it to? And then from a carrier perspective, as Greg could probably speak to more than any of us up here, they're struggling before the pandemic with, how do I even get to 50% of them? I'm just leaving business on the table. And so I don't even know what the ratio would be over the last 2 years, but it's well less than 50% they're even able to quote.
Yeah, Greg, what's your perspective?
Yeah, I was gonna actually just go with Jason's answer because that was spot on. So one of the big challenges that we're looking at is just that volume of submissions that come in, and in our case, we are still somewhat manual, so those submissions come in as Excel sheets, PDFs, Word documents. They go to a shared service center, and somebody keys that information in. So there's a time delay there. And so for us to get all that data in, to get it in front of an underwriter and then have them look at it, we reject probably 50 to 60% just out of hand. And then of those remaining 40, the underwriter has to kind of go through and figure out, is this a risk I want to take? And it's not easy looking at a schedule of 100 locations to figure out, hey, this is the one that might burn me, or this is the one that might have a high volume claim based on its characteristics, based on the tools that we had in place, a couple of years ago. And so that's what we're working towards, is how can we better surface that data for our underwriters so it's in a nice, easy to view format so they can make better risk decisions.
Just to make you feel better, you're not the only manual process carrier that we've come across.
Thank you, that helps.
Greg, stay with the global view. Talk to me about supply chain in terms of what's happened in the last 2 years or even before that. And what I mean by that is are you getting any feedback from your underwriters about the business environment and the complication in supply chain and what that means to underwriting the business or what that means to their eventual customers?
Yeah, so the business has certainly changed. I think the pandemic, to Jason's point earlier, kind of exacerbated a lot of things. It also exposed some of our customers to brand new risks. So you take a workforce that was traditionally in an office, you send them home, they're now on their home network with their home devices. You've now introduced cyber risk. So it's much easier for someone to glom onto somebody's personal router or do some sort of attack there versus in a structured environment. You've also got restaurants that went from a location where they served food to now they've switched to delivery drivers. Ideally, they're using somebody like an Uber Eats or something like that, but in other cases, they may be doing that delivery themselves. So they have employees that were servers. They're now delivering delivering food to people's houses, which is a completely different class of risk from a workers' comp perspective. You're also seeing, from their perspective, they're looking to go a lot quicker. So there's additional stresses on getting that submission in, getting it looked at, getting it underwritten. So those are probably the two things that have challenged us from a business and underwriting perspective.
Cameron, what about the McKinsey view? Business and changes in the past 2 and 5 years.
So maybe I'll sort of answer differently, more forward-looking in terms of one of the trends that's going to, I think, impact a lot of businesses, which is climate change, right? You would expect, particularly, and back to your point about differentiating small businesses versus large enterprises, particularly large enterprises, focusing on how they would, for example, reduce their carbon emissions, setting aspiration for net zero, and that inherently will require a change in how they operate, change in how they approach manufacturing the products that they offer, services they offer, technologies they use, and with these changes, you would expect a change in the nature of the risks that they face. And I think this is where the insurance industry will come into the picture in terms of helping these institutions address those evolving needs. Just as an example, this is a very basic example. If you have solar panels on roofs, the nature of the property risk is going to be very different. So I think that's one aspect. I think the other, and one of my colleagues spoke to this yesterday. If you think about sort of in the coming years, what is going to be the impact of climate change in terms of the structure of the economy? You're going to expect to see certain sectors shrinking. You would expect to see new sectors emerging, whether or not it's generation of sustainable energy, storage, delivery, et cetera. And even today, entities that are looking to invest in building some of these technologies, they're actually in need of insurances. There's not necessarily a lot of offerings out there. So if you want to fund some of these investments through debt, which maybe is more favorable than, let's say, equity funding, you need insurance cover. And carriers are, these are nascent industries. It's not clear sort of what the nature of risks are and so on. So one of the things, just to add to what was said, of course, there's a lot that's happened over the last few years, but I think we expect to see a lot of changes in the future from the standpoint of climate.
Yeah, we're getting increasing amounts of requests in for research around either sustainability or climate change, which would indicate that businesses that previously maybe weren't or didn't think they needed to be involved in that are now going to be asked by their boards. So that, again, complicates the running the business. Hey, I thought I was in X business, but now I've got to learn about sustainability. Is that a fair?
Yeah, definitely. And I think a lot of, frankly, also insurance companies are right now also thinking about what is the posture that they want to take, what is the, the approach that they want to take in terms of supporting this, reduction of emissions, right, reaching net zero, and I think that has a lot of implications in terms of how you underwrite, right, and how you think about your portfolio of risks and how it's going to evolve in the future.
Just to piggyback on that one, I'll say the obvious, but the severe weather events have had an impact on our underwriting guidelines. There were certain places we would insure prior to the last couple of years. Now we do not, and in large part because of climate-driven weather changes.
And just for our audience, and just because of the travel restrictions and whatnot, probably not as international as in previous years, could you just explain a little bit about SOMPO and let that be your segue into how you see the business environment changing?
Can you hear me? Okay, thanks, Mike. Yinnon Dolev, I manage innovation for SOMPO in Israel and Europe. For those of you who don't know, SOMPO is a large Japanese multinational insurance company. And let's talk about SMBs. I think pre-pandemic, much of SMB's customer engagements were very much physical, direct interactions with customers, whether being restaurants or even B2B, even ourselves selling to our own customers. Pre-pandemic, that face-to-face interaction was key to our growth. That's changed, almost to a certain extent irrelevant. And so we're now seeing an accelerated digital transformation. Up until 2 years ago, I would say digital transformation was just for big corporate. And today it's changing. Not so much in AI and big data for SMBs, I think. It's more around customer engagement and interfaces, right? So adoptions like, chatbots, online sales, supply chain systems that support that, real-time delivery, improved customer support, IVRs, you name it, all that good stuff. And so we're seeing more and more of our customers in the SME segments asking for our help in order to help them change and make that digital transformation. I also think it poses a world of opportunities for the insurance industry as well.
Yeah, let's shift to insurance coverages and pricing. So talk a little bit more about what coverage or pricing impacts that might have.
Right, as the supply of online sales and online retails increases, the world of risks changes as well. And it's non-traditional risk. For example, unplanned downtime. We all saw what happened to WhatsApp and Facebook 2 days ago, right? What happens if you're an online shoe retailer that's built on top of Amazon or Shopify or Salesforce.com or what have you, and all of a sudden you experience downtime insurance? That can happen. There's other risks as well. So all of a sudden, as you shift your customer engagements to online platforms, your risk profile changes. That's why, for example, just an example, we partnered with a startup called Parametrics that provides a system that can measure that kind of a potential risk of downtime. And we're now offering a parametric insurance coverage for unplanned downtime. So there's actually no claim settlement. It's parametric models. We pay the customer immediately. And I think that's just the beginning. We're starting to more and more explore and understand the world of risks in the new world and try to provide some answers and change our product portfolio for that.
And you just reminded me, what about reputational risk?
You mean for our customers? For this?
Yeah, the coverage of a business to anticipate or at least be aware of reputational, particularly as more of their profile moves online?
That's key to us. So our core business is Japan, where customer service has to be top notch. In many cases, better than product, right? So if you're shifting to some new models of customer service but still not up to par with what customers are used to, you're going to see some attrition, especially in areas where it's highly competitive. And so reputational risk with regards to level of service definitely is there. And I think one of the key things that we're trying to provide our customers is the ability to not only cover their risks, but also to give them some value-add services to meet this customer service requirement, so that they can provide a real-time, high-quality service to their own customers.
So from an insurance perspective, you're now moving beyond just price, coverage, form, and more into some of these service areas?
Right. Some predictive, and also being able to mitigate some risks in advance, and value-add services. Yeah, that's a big portion of our growth strategy.
Cameron, what about engagements in McKinsey? Not to ask you for any secret sauce or corporate secrets, but what type things are insurers asking your firm to come in and consult on them, given a changed business environment?
Yeah, I mean, we talked a lot about the evolving nature of risk, and just go back to your comment about differentiating different segments. Just to give one example, right? If you take the example of mid-market as a segment, right? So, you know, we typically see carriers having generalist population of underwriters, right? That write risk across multitude of industry classes. And the challenge is, how do you actually make sure that they actually think about risks in the right way? We often do these exercises. We bring a bunch of underwriters in a room and give them the same submission and say, you know, what do you see? What do you look for? How would you approach it? And you get very different outcomes.
Underwriters hate that, by the way, right? Underwriters, it's just torture.
So I mean, and look, there's an aspect of underwriting that, you know, especially in a segment like mid-market or up-market, that is subjective. But of course, the variability that exists does impact results, right? And then, you know, we're talking about, you know, multiple X difference in sort of the prices that a group of underwriters would call provided with the same exact information. So one of the things that we're seeing a lot of traction is, how do you as an institution capture what your institutional view of what matters for a risk is? And how do you codify that, not in a guideline document that sits somewhere, right, off a shelf, you know, in a knowledge repository? Maybe underwriters look at it, maybe they don't look at it. If they look at it, maybe they interpret it a certain way. But how do you actually embed that in the workflows? So think of like a dynamic workflow where, depending upon the type of risk that's the underwriter is looking at, would guide the underwriter to look at a certain set of critical factors. And depending on what they find, you know, probes them and guides them to go deeper in certain areas. And this is not to say that you sort of make the underwriters processors, right? You actually allow them the flexibility to say, you know, I think XYZ matters and that's not reflected here. And you actually learn from those deviations so far as they actually lead to better outcomes. And that you create essentially this virtuous cycle of going back and refining your institutional view of what matters. So the analogy we often use is, think of like tax tools, right? Every year you have millions of people that are lay people who become experts in the tax code. So it's the same thing. How do you actually make these generalist underwriters become specialized? And then if you, over time, you can imagine that with these sorts of capabilities, that they can actually, you know, handle larger books of business, and sort of the nature of what they do is going to change. It's not to say that you're not going to need underwriters. It's just that how they approach risk and how they approach the books of business is going to be very different.
Gonna break the mold just a second, Greg, because Jason, that sounds a little bit like what you guys have been working on in terms of codifying and looking at the data coming through and the submission process. You want to talk a little bit about how the technology comes right into the insurance response?
Yeah, I mean, we, you know, as an AI company, we need to gather and aggregate all of the data in order to make our machines smarter, to kind of read and help automate these processes. So, yeah, you know, it's almost a virtuous cycle. So the more data that our customers use, the more it feeds our models, and the more kind of insight it provides back to the customers. So, you know, we offer solutions now, not just on the submission side to process submissions, but once the quotes go out, how do we automate the evaluation of these quotes on behalf of the broker that receives it? And then ultimately, when the policy is issued, we are gathering data from the policy and comparing it to the binder as well. So, you know, we're gathering data across the entire spectrum of that placement process to make more efficient the processes for both, the entire market, the carriers, the underwriters, the brokers, the MGAs.
And how does that break in between the two segments we talked about before? Is that exclusively small commercial, or are you getting into kind of the mid and large with those type of solutions as well?
Yeah, I mean, we focused originally at the top end of the market. As we started the business, we need a super set of data to create models in order to make them intelligent enough to see and read these documents. We are at the point now where we can kind of go down to that middle market, and actually the problem in the middle market is a volume problem. So the larger carriers, the larger brokers, the more complicated risks has one sort of characteristic of a problem. When we go into sort of that mid-market space, the volumes increase dramatically, and they really need something to automate the ingestion of all these documents, to automate the underwriting process.
Go back to insurance. Greg, from a global commercial underwriting organization, the business changes that we're seeing, the impact, we talked about climate change before, supply chain, anything else you'd see that's changing some of the contract or some of the pricing terms?
I think we caught most of, from my perspective, I'm focused primarily on kind of the North American market. But talking to my peers, they are seeing the same trends as far as the climate change pieces, as far as the nature of the risk evolving, as far as the technology advancing, giving our business customers additional options to sell their pieces, and then adding additional risks to that. So it's a very common story across. I think from a product perspective, North America has a unique situation of having the 50 state regulators, so we have kind of an additional layer of complexity having to deal with each one of those and having to file all of our rating and forms and such, which our counterparts in other locations do not. But very similar trends across the globe.
So I want to switch it to just pure technology and the response to both of those. And Greg, stay with you, because I know QBE invested some years ago in a company, a piece of software that would actually take the unstructured contract and try to make sense of and compare different forms and see where there were gaps. I know Swiss Re built their own internal engine to do that. So that was for kind of the past environment. We just talked about how the environment's changing. Those contracts are going to be changing. How does a technology like that work? And then how does it actually help or not help solve some of the issues we talked about?
So I was going to make a joke of we probably haven't changed much in the last 2 years. I spoke earlier in another session and kind of talked about our progression, and we've kind of made two big bets. One is on some larger kind of foundational type efforts, so new policy admin system, new master data store, new claim system, and then some shorter term bets. We are now just starting to take advantage of some of those foundational elements and layer in things like document ingestion. So taking documents and turning that unstructured data into structured data. A standard underwriting workbench to take all the information that we have, whether it's third-party information from our agents and brokers, whether it's third-party information from external data sources, whether it's things we have in-house, putting all that in front of the underwriter in an easy-to-use format, and then connecting up to the policy admin system to do that quote and bind piece very easily. And for us, we're trying to get to that sweet spot where we have that hidden hand that kind of guides the underwriters to these are the choices you should make, these are the things you should look at. So we get that consistency, but not be overt about it. So it shouldn't be in their face, big flashing red lights to say you've messed this up, but just kind of guide them to make the right decision. So it's taking all those tactical pieces. I'm not looking at 100 locations on an Excel sheet. I'm not trying to pull details off in a Cord app. I have it all presented, and the 2 or 3 things that are really important are right in front of me, and I can make that decision, guided by rules in the background, guided by AI in the background to surface the right things. So that's really where we are as far as that journey goes. As Jason and I have talked, we are just at the beginning of that, starting to make some of those bets.
And Jason, I know you guys have been working on that for a number of years. So based on that experience, then, what do you see the more successful companies, insurers, doing in order to try to get to what Greg was talking about really focusing in on what's important, about having the underwriters change the way they do business. I mean, what is that they do that maybe you don't see at some of the other folks?
Yeah, we need it's an interesting question. So
You can just say I was 100% correct.
Greg was 100% correct. I think everybody's talking about the fact that we want to digitize the industry, we want to disrupt the industry, everything's got to change. I don't know how many years we've been talking about it, but the ones that are successful have somebody that's a change agent internally that's willing to kind of take the risk. I mean, we're in an industry full of professional risk managers, and so it's difficult to get somebody to kind of be brave and courageous and say, I'm going to make that change on behalf of the company. But there's unlimited potential to automate this entire process and provide the underwriter the insight without scaring him that he's going to lose his job or her job because it's going to be replaced. It's not. There's a bit of an art and science to this. And technology can be applied in such a way that we solve the science part and we let the underwriter do the art part. There's a lot of judgment that still isn't cognitively available in technology, but we can automate the rote processes in such a way that you're not using human capital to manually pound information into systems. And today, when you do that, whether it's for processing submissions or comparing quotes on the broker side, or, as you said, comparing policies when they're finally issued, you can deploy that human capital elsewhere to enhance relationships with your customers. And what automation can do is, today you're putting in the minimum amount of information to get that price and to get that quote out the door. But automation can take all of the submission data, not just the ones you choose to quote, and all of the quotes, not just the ones you bind, and gather that on behalf of the customer. So it's really interesting, and the successful ones have that change agent and that courage to step up and say, I'm going to make that change, like my friend Greg here.
So I'm going to ask each of you to comment on this, but Yinnon, I'm going to pick on you because you're furthest, and I can see you coming more. No, seriously. So you walk the expo hall, and it's like you've got this whole menu you can pick from of companies that do this or do that, and many of them do it very, very well, and many of them have very solid business cases. So 2, maybe 3 of those technologies that if you were running your own insurance company, I'm not asking you to comment on what's maybe on SOMPO's plate, although you can if you'd like, but if you were running your own insurance company, you're looking at that expo hall and you're going, well, I got to have some of that, I got to have some of that, all the rest I'll let go. What 2 or 3 would that be to kind of guide our audience in terms of technologies to impact commercial lines? Do a little prioritization for us.
Well, first of all, I'm glad to, I can say it's hard, right? There's more and more, and I'm glad to see that there's more and more. It means that more capital is being injected into technologies in our space, which is great. I think to be able to solve for this, companies need to take a very disciplined approach. It's very easy to be, blinded by all the shiny objects and the really cool technologies, but for us, it starts with business problems, business pains. We start with prioritizing what specifically do we want to solve for, and by recognizing that we can't do it on our own. And so if you're to ask me which ones, I can give you an example, something that we are already doing, so it's easy for me to explain, which is around commercial underwriting commercial policies. For us in Japan, also elsewhere, it's a problem because it's a process that's very cumbersome. It's very costly. It takes a long time. Our customers, to a certain extent, complained about it. So there's a company called Plank, and which is actually here. And just using a business name and an address can give you a whole risk profile of a business and allow for, and also pricing and the whole thing, right? And so first we started with a business problem, then we tested the technology, and we realized that the information that came through their platform was much richer than ours, on our own customers. And to a certain extent, also, it covers some of the gaps of information and data that we had about our own customers. So it was great. Not to mention the fact that, there's of course the automation piece and the impact on loss ratio. So today we're actually starting to implement this in Japan. We don't intend on fully automating. Like, we're not just going to let robots, be in charge of our business, but people's roles are going to change. And so for us, this is something that's kind of more revolutionary than evolutionary. It's a technology that's applied to a real world problem. It really solves a problem. It allows for to solve for a problem in minutes as opposed to days or weeks, and it has financial impact on us. So that's something that I'm hoping is going to be successful.
Cameron, your clients, obviously, competition, who's doing what? What are you seeing them doing to give a competitive advantage in terms of technology investment, specifically in commercial? It could be small commercial, it could be mid to large, but what are you seeing as you look across? Because you've got that view.
So maybe I'll give, just to be specific, an example in SME, which we haven't talked, Yinnon referenced this, and maybe less so about the technology, but actually the capability that we see some carriers investing in. I think building a bit on what you said, which is lots of talk about external data, and there's more and more out there, particularly in like a market like US, where every day there's a new data product. The quality of the data is actually improving, the third-party data that's being provided. And a lot of carriers are actually investing in pulling this data, and it allows you to sort of build better loss models, have more granular segmentation of risk. I think what we're seeing is a shift from doing this sort of piecemeal or sort of fragmented versus actually creating like a data muscle or sort of a data machine where, oftentimes we support clients on building a team or establishing a process where you have folks who are familiar with the third-party data providers that are out there, on a continuous basis are scanning what is becoming available. So, and in doing this sort of at pace. So imagine every quarter you're actually looking at tens of different data products. And the process that they go through, one, working with the underwriters to say, what do we think is could be valuable, right? So taking a hypothesis-driven approach and say, imagine you had a magic wand and you want to know everything that you wanted to know about this retail shop, right? What is it that you'd want to know? And then actually stacking that against what's out there. And then working with data engineers and say, can we actually create features? Because a lot of times they're all features that come from these data sources, may not be things that actually provide predictive power. How do we actually create features that replicate or serve as proxies for what underwriters think are important? And then actually testing that, within sort of your using your best loss models, right? Not necessarily what you price to, because you have regulatory constraints, you have technology constraints, et cetera, but you actually can use your best model, use whatever, advanced analytics, method that you think is important. And then if you see predictive power, then you make a decision, should we actually go procure this, set up all the APIs and so on that you need. And it's one of those things that it's not a one-time exercise, given what's sort of what we expect to see, more and more data becoming available. Rather, it's something that you want to do on an ongoing basis, and you may only see incremental lift from any data product, but it adds up, and if you do this, faster than your competitors, that gives you an edge.
And typically that role has got a title like, or what might people recognize that, or okay, I heard about that. What, in any examples?
Of the roles within the...
Of the person that's going out there scanning, looking at the data, making sure the data is appropriate, making sure it's clean, if it's not, where the gaps are.
Yeah, so this is actually one of the interesting parts, and that's the reason why I think some of the carriers that we work with, we see, like the reason why they're not actually making progress as fast as they want to is that you don't have these roles, right? You don't, some folks in product may be looking at things sort of dabbling, but then it's disjoint from the data science group, it's disjoint from the pricing actuaries, nobody's really talking to underwriters, so it's sort of all over the place. So I think that's exactly one of the core elements of this process. We actually create a team, whatever you want to call it, wherever they want to sit, within product, within the business units, what have you, it almost doesn't matter. It's like, what are the profiles that you need? By the way, they have to also work with procurement. So you actually create a cross-functional team that this is what they do. And they do this on an ongoing basis, and as they do, they get better. This is actually, you put your finger on oftentimes a very simple, there's a simple solution, but a challenge, it's a challenge right now given the structure of many organizations.
Jason, that sounds like something you've run into as well, needing that role.
Yeah, we talked about the change agent. I don't know if there is, it's a chief data officer that's doing, responsible for the quality and aggregation of all that data. I mean, we look at it a little bit differently. We look at it from a perspective of what's the data that carriers and brokers are missing internally rather than going external, bringing more information and mining through that information to provide insight. I talked before about automating the rote processes they're suffering from today and gathering all of that information. But if you think about what that enables in the future is providing insights back to them right there. The role, I mean, Greg would know more than any of us up here, but I think it's, you'd say CIO, it's chief data officer, chief privacy officer in some cases, chief sales disablement officer that I see sometimes.
Yeah, I was going to throw data architect and data scientist in there as well, kind of the more tactical roles that might actually do that work.
Yeah, but it's fragmented, as they're saying.
Yeah, but it is something that needs to be in place. Well, the red light is blinking, and hopefully over the last half hour, you've gotten some ideas to take back and hopefully implement and move your commercial underwriting organization forward. So, gentlemen, thank you very much. Appreciate the help.